Today we're going to take a closer look at the gaming industry, more importantly, two individual topics. First is going to be Activision. We can see this is a company that its stock price has jumped dramatically ever since that acquisition deal with Microsoft. The second topic is going to be more on video game pricing right now. There is a shift happening here, and unfortunately not that good for consumers, but it might be okay for investors. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so let's take a quick refresh on this Activision Microsoft deal. On January 18th of 2022, Microsoft announced that they were going to acquire Activision. Microsoft will acquire Activision for $95 per share in an all-cash transaction valued at $68.7 billion. If we take a closer look, the overall price of Activision right now is $77, and that's a huge difference from that $95 that is expected to be acquired by. I do want to say there are numerous reasons for this kind of discrepancy in price. First, I want to say this is a deal that's not expected to close until sometime in June of 2023, if that, and it could possibly get pushed back a little bit more. So this is a little bit less than a year from now. So I do want to say, because of the huge kind of timeline difference, it does kind of worry investors that, hey, what if something happens between now till then that the deal might not go through? So there's that difference in price because of the huge timeline needed. The second reason is this is a very big acquisition, and many investors are fearful that regulators might actually halt this acquisition. I mean, most recently there have been reports that Microsoft Activision acquisition is expected to face deeper investigations in UK and Europe. Obviously, one of the biggest critics of this deal is Sony, the creators of PlayStation 5, and they say that this deal will have a major negative impact in the overall kind of gaming market. Obviously, Blizzard is a top gaming company, and if for somehow in the future Microsoft makes things very kind of exclusive, it would definitely hurt the overall company like Sony in a big way. So even with this news that came out on September 15th of 2022, we can see Activision stock price in the past 5 days hasn't really shifted much. And this kind of confirms the earlier points I mentioned earlier, where investors are worried that regulators might kind of halt this deal one way or another. Because if investors were very hopeful of this acquisition going through, any news of kind of headwinds caused by regulators, I would expect to kind of cause some form of headwind to the overall stock price, and the stock price barely moved. So in my opinion, investors' expectations at the moment seem to be on at least the more cautious side. There are obviously some investors that believe this deal will go through, and it obviously will be bullish for the company. For example, Atlantic Equities upgrades Activision Blizzard and says the approval of a Microsoft deal will be a catalyst for the stock price. And obviously with the stock sitting at $77, if it gets approved by all these regulators, this stock price can easily jump closer to that $95 price point. I also do believe even if the deal gets canceled, even though investors are a bit cautious, it would definitely be kind of a negative catalyst for Activision stock price. I want to say I'm not an investor of Activision at the moment. I am an investor of Microsoft, and I do believe either or is a good scenario. If Activision stays as an individual company, I do believe this is going to be a good player with its games like Blizzard's, with its games from Call of Duty, and if they do join Microsoft, I do believe it also will be good for Microsoft, as it will make them a huge leader in that space. I also want to say that all platforms also have exclusive games, so I don't think this would really affect much the monopolization of the gaming industry. So I do believe the deal has a higher chance of going forward, but there's always that risk that it might not. Let me know in the comments below, what are your thoughts? Do you think this deal is going to go through, or do you think it's going to get stopped by regulators? Also, if you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn more about the semiconductor market, make sure to check out my newsletter. The link is down below. All right, so the second news I wanted to take a closer look at is this overall shift in price for video games. Ubisoft, a big gaming company, which is mainly known for their Assassin's Creed franchise, is shifting to a $70 price point for AAA games. And this is pretty insane. I haven't really purchased a new game in a while, and usually if I do purchase, they are on sale. So it's crazy to see price points are being closer to the $70. I remember when I was younger, I was paying somewhere between $50 to $60. Now it's going to be crazy to the $70. And I thought this was just Ubisoft, but it does seem like this is something that many game companies are doing. Here, I took a closer look at some of the new PS5 games The Last of Us, if you pre-order, is going to be $70. Call of Duty, the upcoming Modern Warfare 2, is going to be $70. So it does seem like all gaming companies are shifting this way. As a person who kind of understands business, I can see why they're doing this. Obviously, the cost of software is getting expensive. The amount of kind of hardware that they need for kind of all this production is also probably pretty expensive. Being able to maintain updates, being able to kind of maintain multiplayer functionalities and everything else is probably getting expensive for companies like this. So I understand why the business is doing it. I obviously understand the pain for the consumers as well, because dishing out $70 for a new game is something I personally wouldn't do, and I'm pretty sure certain consumers are going to be feeling the same way, especially during a time right now where many consumers, or there are reports that consumers are going to be more thoughtful on where they're spending due to fears of recession. At the end of the day, I do believe this is going to bode well for gaming companies because it is going to increase their overall margins. Gaming companies do tend to have high gross profit margins, but when you take a closer look at just profit margins themselves, they are a lot lower, as the overall game development is super expensive. Advertisement and overall personnel definitely eats those margins, but an extra $10 per game on these new products, I do believe, is going to overall improve these gaming companies' margins, which obviously is going to bode well for investors. So again, I understand the business side, but I also understand how consumers are going to be pretty aggravated at this. I definitely want to take a closer look at how this holiday season is going to do. Are they going to sell less games now with the higher price points, or are consumers not even going to bat an eye when thinking of paying an extra $10 per game? So that's it on today's episode. Let me know what you guys think. Take care, have a good day, and see you next time.